time for Futures in Focus. We're looking at natural gas futures. They're rising for the third straight day on a forecast for falling stockpiles. This comes as the price has risen 20% since November, thanks to the polar vortex. For more, I want to bring in Larry Shover. He's Chief Investment Officer at SFG Alternatives. He is joining me here from the CME. So, Larry, when you look at natural gas and you look at the weather that we have had, you know, it's natural that the stockpiles have been drawn down because it has been so cold. So what happens now?
Well, it's according to what happens in the end of the winter and summer. I mean, historically, the week of January 20th is the coldest week in North America, and perhaps it will be colder and stocks will be drawn down even further, putting upward pressure on natural gas. However, if we do normalize weather-wise, we could see natural gas easily slip below that $4 mark, maybe even testing coal to gas switching parity levels, especially in the mid-Atlantic states or the PJM, Pennsylvania, Jersey, Maryland.
I'm also curious what's happening on the supply front, not just, or I should say on the production front, because there obviously we're seeing a lot of new production over the past several years from the U.S., from the shale formations. So what's the latest there on the supply and production situation?
Yeah, and so supply overall is very good. However, short term, it's very bad because we've had a lot of well freeze-offs. That's something we're not used to because so much of our natural gas used to come from warmer regions. However, so much of it coming from North Dakota and Canada, we've had so many freeze-offs, and what that's done, I mean, that has stalled production. It's estimated of 4 billion cubic feet per day. All the while, we've had a record amount of demand of about 130 billion cubic feet per day. It's not good math, and so inventory has been drawn down a lot more quickly than expected. It's leaving the market very, very vulnerable, so we need to have normalized weather to get the market back in sync.
Hey, Larry, let's back up for a minute. Freeze-offs, what exactly happened? So the weather gets so cold that they can't get the natural gas out of the ground?
Yeah, exactly. I mean, when you have a wellhead and the temperatures around it are below freezing, which it typically is in North Dakota, they can heat that, but see, there's water combined with that, so it freezes, and it just taxes the infrastructure. It's a lot more expensive to get out of the ground and a lot slower to get out of the ground. So again, there's a lot of production growth coming out of these regions, but this phenomenon of a freeze-off, well, it's not a new phenomenon, but it's a newer phenomenon given the amount of gas that's coming from those regions.
And also given just how cold it has been. One final thing I want to talk about quickly that's been going, another sort of longer trend in the natural gas market is utilities switching to gas from coal. Where are we in that cycle, and how's that affecting the natural gas market?
You know, that's really interesting because it seems to be that coal to gas switching by utilities should be driven by economics. Whatever is cheaper, that's what they will use. However, there seems to be a developing theory that utilities, as long as they can, will tend to use natural gas just because of the bad politics surrounding coal. So that's going to put more taxation on demand.
All right, Larry Shover, thank you so much talking us through natural gas there in Futures in Focus. We'll be on the markets again in 30 minutes.